Welcome back. We are coming to you live this week in Davos, Switzerland. Business leaders from across the globe are gathered here for the World Economic Forum. And one of the hottest topics this year, the booming U.S. economy. I spoke with the Blackstone Group's chairman and CEO and co-founder, Stephen Schwarzman, to talk about the global impact of President Trump's tax overhaul.
Starting in the United States, I think the tax changes, tax bill, are going to be quite positive. First you've got lower tax rates and highly competitive around the world for the first time in a very, very long time. You've got expensing of capital equipment 100%. So if you're in any kind of business that needs equipment, U.S. is going to be a great place to be located. You've got the potential to return $2 trillion of money into the United States from abroad, just from U.S.-controlled companies. And that all adds up to something pretty good. And in addition, I think what's going to happen is that companies outside the United States are now recognizing that the U.S. competitive posture has changed quite dramatically. And we're going to be seeing unanticipated foreign investment into the United States because we will be the best developed market in the world. So altogether, it's a pretty positive story.
This is a really important point that you just made, actually. Are you seeing investment plans change as a result of these new policies from investors across the world?
Yeah, it's anecdotal, which is how you pick things up, because everybody's got to make plans. But what people say when you talk about it is, geez, something really important is happening in your country. I've got to do more there. You're going to grow faster. You're deregulating. We should be doing that in our countries. And, it's a very positive buzz.
Yeah. A lot of people were questioning the carried interest situation. I want you to make the case. Obviously, you're getting a benefit because of the carried interest, that it's still there, this loophole. The administration says we left it in there. We don't want to discourage private equity and hedge funds from investing. Make the case for keeping that loophole in there, because they said they were doing away with all the deductions.
Well, it's only been 100 years that this is a loophole. I don't know how you define.
So it's not a loophole, actually.
Right. It's not really a loophole. It's a capital gains treatment. And it has been changed under the current tax law. And what they've done is they've moved it from a normal 1-year capital gains to 3. So what happens is if you have any capital gain within that 3-year window, it's treated as ordinary income. So this affects basically, pretty much every hedge fund and denies them, carried interest capital gains treatment.
For 3 years?
No, because they tend never to invest in anything longer than 3 years. So it knocks them out pretty much. And it also affects firms like ourselves when we sell something before 3 years, which we do a certain percentage of the time. So it's not like things were left exactly the way they were. There's a long discussion and argument as to why this is a capital gain. And one of the reasons is that, you have to invest money to get it. If it's paid out, and the fund that you've gotten the profit in doesn't meet certain returns, you have to pay the money back.
Which is why I asked you to make the case, because I'm hearing the same thing. Not to be underestimated is the rollback in regulations. This has had an incredible impact on economic growth, on unleashing animal spirits, yes?
Absolutely, yes. And, this is one you can see really easily. There was really a sort of a regulatory suppression of the U.S. economy, part because of the financial crisis and its aftermath, in part because usually systems tend to overshoot. And we probably overshot in a whole variety of areas over the previous 8 years. And, there was a lot of rhetoric that was very negative to the business community and a lack of understanding, I think, what powered an economy. And this type of rollback, which isn't everywhere, it's not irresponsible in toto, is really creating, enormous energy and enthusiasm and is actually an example to people around the world of how you get an economy going. It was no accident that the stock market started going up the day after the election. And not because anything was accomplished that day, it's because the theory of the case, the plan to do much more deregulation than increased regulation, as well as reduce taxes, bring money back from abroad, this is actually quite sound. I think it's difficult to really, be thoughtful and be against this in concept. How things work out practically is, some things will work terrifically well and some won't. But in toto, this is a very good strategy. And the fact that markets have embraced this means that politically, people who don't think this is a good idea are being outvoted, if that means anything, big time by the business community. And it's not just the U.S. business community. Markets are global, particularly the U.S. markets. And the global world is saying, in terms of checking right track, wrong track, this is right track.
Look around the world for us. Where do you see the big opportunities right now?
Well, U.S. is a good opportunity. Europe has been very strong, surprisingly. People had given up on Europe. We started really investing heavily in Europe a few years ago. So the breakup in Brexit has led to, a recommitment to Europe. And the biggest problem we found when we were investing in Europe, why it was so appealing, is that the Europeans had lost confidence in Europe.
You've done so much in China as well, from the Schwarzman scholars to just investing there. Do you still see opportunity from an investment standpoint in China?
You have to be selective in terms of what you do in China. There'll probably be a business that grows up there over some of their distressed loans because there are bunches of them. And it's not as easy as it is in other parts of the world. But China itself, if you buy the right types of things, it's growing. At the latest report was 6.9%. It's a very vibrant economy. If you go to China, you sort of shake your head when you come out. I mean, things are changing so rapidly, and that's the nature of a country that's been the most rapidly growing, transformative economy in world history over a 30-year period. It's pretty astonishing.
Schwarzman made a prediction that the company will continue to get more successful. They're really right now embarking on a new capital raise for the next 2 years. Steve Schwarzman, my thanks.